Welcome to the Ryun Givens & Company Tax Blog. I'm Curt Brand. Each week we will look at an area of taxation to provide you with knowledge and help you plan for the future. Today and in the next 2 weeks, we will take a look at year-end tax planning as it relates to purchases of equipment. An expanding and strengthening economy may mean that December 31, 2013 will be the end of the line for some stimulus-type tax breaks. Unless Congress acts, 50% bonus depreciation generally won't be available for property placed in service after this year. Also slated for disappearance is the 15-year write-off and special expensing allowance for qualified leasehold improvement property, retail improvements, and restaurant property. Finally, the overall Code Section 179 expensing limit is slated for a drastic reduction for property placed in service next year. Thus, companies should try to accelerate their buying plans if they are planning to purchase machinery and equipment or invest in eligible real estate assets during the remainder of this year or early 2014. Let's talk about making the most of the Code Section 179 expensing limits for 2013. Under Code Section 179, a taxpayer can elect to deduct as an expense rather than depreciate up to a specified amount of the cost of new or used tangible personal property placed in service during the tax year in the taxpayer's trade or business. This does not apply to an estate, trust, and certain non-corporate leaseors. The maximum annual expensing amount generally is reduced dollar for dollar by the amount of Code Section 179 property placed in service during the tax year in excess of a specified investment ceiling. The amount eligible to be expensed for a tax year can't exceed the taxable income derived from the taxpayer's active conduct of a trade or business. Any amount that is not allowed as a deduction because of the taxable income limitation may be carried forward to succeeding tax years. Expensing limits for 2013. For tax years beginning in 2013, the dollar limitation on the expensing deduction is $500,000, and the investment-based reduction in the dollar limitation starts to take effect when property placed in service in the tax year exceeds $2 million, which is the investment ceiling. For tax years beginning after 2013, the maximum expensing limit is scheduled to drop to $25,000 and the investment ceiling is scheduled to drop to $200,000. Congress isn't likely to allow the expensing limit and investment ceiling limit to drop this drastically, but it could well legislate a significant reduction in today's generous limits. Where possible, taxpayers should factor the annual expensing limits for 2013 and the possible drop in these limits for 2014 into their annual equipment purchase plans. If you would like to discuss how these issues affect you and your tax situation, please email us or call us at the number on the screen.